stock market crash that we have seen unfold over just the last couple of days already rivals the crash at the beginning of the Great Depression in 1929. So first, let me show you what I mean when I say that this crash already rivals the Great Depression. This right here is a table of the 25 worst 3-day percent changes in history in the stock market. And you can see as of April 7th, the current market crash over the last 3 trading days is at number 11. Number 10 was the Great Depression, and number 12 was also the Great Depression. You can see as you move down the list all the way to the number 1 worst 3-day performance, we see 1987, which was Black Monday, the Great Depression, the financial crisis, World War II invasion. Those were all examples of 3-day market performances that were worse than right now. But as it stands right now, we are already seeing stock market performance levels that match the damage that was happening during the Great Depression. But the shocking thing about this performance recently is that by and large, it's not actually retail investors that are selling. If you take a look at this chart, you can see that last week hedge funds had the biggest day of selling stocks since at least 2010. On one day alone, they reached about $40 billion worth of sales, which makes sense considering the rumors that there are many hedge funds getting squeezed out right now because they were over leveraged and now they're facing margin calls. Now you might think, well, it's institutional selling, but it's also got to be retail, right? Not so fast. Last Thursday alone, individual retail investors purchased $4.7 billion in new stock purchases. In other words, the small retail investor is still buying the dip. Now, historically, small retail investors do not have the best timing, and many times they are wrong. But so far, as long as retail doesn't eventually get squeezed out and capitulate and sell at a loss, this does represent a massive transfer of the ownership of assets from institutional investors to the hands of small retail investors. And there are actually examples of this kind of thing happening in the past and retail not capitulating. In fact, this was one of the large outcomes that happened in 1987.